Legal loopholes. Credit repair tactics exposed. Chapter 12. The application process. The application process plays a major role in whether you are approved for credit. It is possible to actually have a good credit score and be denied credit based solely on your application. You don't have to go into this process blindfolded. Filling out the credit application doesn't have to be like rolling the dice or purchasing a lottery ticket and waiting to see if you win or get approved. There are ways you can greatly improve your odds and chances of being approved. After reviewing your credit report and credit scores to determine if you're a good risk, many lenders also want to determine your stability, and many lenders determine this by the following: length of employment history. The more years, the better. Length of time at present address. The more years, the better. Income. More, the better. Occupation. Professional, skilled, or unskilled. Your age. If you have a home phone number. Past credit history. Whether you have a checking and savings account. Whether you have major credit cards. Debt to income ratio. What percentage of your monthly income goes towards your overall bills? Married. If you're married, you're going to rate higher. Dependents. 1 or 2 rates the highest. Residence. Own with no mortgage, own with mortgage, or do you rent? So this is what they're talking about for the credit application. So like for your age group, 18 to 25, you get 1 point. 26 to 64, you get 2 points. 64 and over, you get 1 point. Then here's dependents. If you have no dependents, 0 points. 1 to 3, 2 points. 4 or more, 1 point. Telephone in your name, 2 points. And then it goes on. So they give you points for all these categories. So if you get 18 points or more, you're going to pass. 15 to 17 points, you're borderline, subject to review. And if you get 15 or less, fail automatic rejection. So that's how they determine the stability. But yeah, that's what that part was talking about. So it is important to note that lenders don't particularly like to extend credit to those that are self-employed. Being self-employed can also add to the amount of time it takes to be approved for a loan, because lenders usually want self-employed individuals to produce bank statements. There are many jobs that lenders typically do not like. They are as follows: actor, attendant, barber, bartender, cab driver, house painter, window cleaner, seasonal jobs, self-employed. In addition, the Equal Credit Opportunity Act protects you against unfair lending practices. When applying for a loan, the lender may not consider your sex, race, national origin, or religion. They may not refuse you because you are on public assistance or because your income is derived from alimony or child support. Additionally, you have the right to have a cosigner other than your spouse. Have accounts shared with your spouse and reported in both of your names. And know why your credit application was rejected. If you are notified that your application was rejected, there is usually a reason why, as well as from which credit bureau or bureaus the information was obtained. Use this information, the reason why you were denied, as a means to target the specific areas in your credit report that you need to repair. As I stated many times, the most accurate way to increase your chances of being approved is to obtain a copy of your credit report and credit score before applying for credit. I would also recommend anonymously calling the lender to see what their prerequisite minimum cutoff score requirement is to receive that particular loan. For applicants under the age of 21, see the new Card Act in the appendix.